Hi, my name is Aman and I'm a chartered professional accountant practicing in the Metro Vancouver region of British Columbia, Canada. The small business deduction provides substantial federal and provincial tax savings. So there is a big incentive for companies to try to claim it, and just as a big incentive for the Canada Revenue Agency to try to deny it. The Income Tax Act and CRA do not look at the rental income inside the corporation just like regular income. Rental income, dividend income, interest income, and royalty income are all considered specified investment business, which gets taxed at 50% with 30% refundable upon the distribution of taxable dividends. You might ask, is there a way to get away from paying 50% taxes? Yes, the key is to hire more than 5 full-time employees. The issue is that it takes a lot to build a portfolio of properties which require that many employees. Let's take a real life example from the interesting case law of Huntley Investments versus the Queen, where the taxpayer claimed the small business deduction on rental income received from residential properties. The taxpayer owned and leased 5 buildings in downtown Vancouver. One of them was a 40-unit building and the other 4 were adjacent to each other and had 40 dwellings combined. The key point here was that this taxpayer did not have 5 full-time employees. Instead, the taxpayer used arm's length property management companies and services provided by other related corporations, which were mostly owned by the same family, to manage the rental portfolio. The CRA denied the small business deduction, thereby leading to an increased amount on the tax bill. The taxpayer challenged the tax code, and CRA cannot simply use definition of more than 5 full-time employees to determine whether the rental business should be considered a specified investment business. She argued that business owners could outsource the work and have other associated companies provide the service rather than hiring employees. The court clarified that over 5 full-time employee exclusion from a specified investment business involves a 2-step test. First, it is necessary to know how many full-time employees the corporation employed over the years in issue, and the second was to determine how many full-time employees would be required in respect of the services performed by the associated corporation. Under the first step, it was noted that its building managers were mostly couples who split a full-time position, so neither was a full-time employee. For the second step, the court made an attempt to determine the number of full-time employees required to provide the services on a reasonable basis. The judge went into prior court cases to determine the definition of full-time employees and how several part-time employees cannot be added together and called one full-time employee. It was found that these services would have been required if the taxpayer had started the redevelopment proposal during the taxation years in question. The judge concluded that the regular day-to-day rental operations would not have required that many employees. The judge sided with the Canada Revenue Agency and concluded that the taxpayer did not require more than 5 full-time employees to run the operations. As such, the taxpayer cannot claim the small business tax rate. Claiming a small business tax rate on your rental property needs to be done within the purview of the income tax law under the guidance of professionals such as chartered professional accountants. If you want to be notified about our new tax videos, please consider subscribing to our YouTube channel. Thanks for watching and see you in my next video. Until then, bye.